This video is a review of Honda's FY 2025 full-year financial results, period from April 2024 to April 2025. Honda Motor Co. is a Japanese multinational corporation primarily known for manufacturing automobiles, motorcycles, and power equipment. Summary: the operating profit for the fiscal year ending March 2025 was 1,213.4 billion yen. The motorcycle business performed strongly on a global scale, setting new records in sales volume, operating profit, and operating profit margin. In contrast, the automobile business experienced a decline in sales volume, especially in China and the ASEAN region, and faced pressure from increased incentives for EV, electric vehicle sales in North America. However, sales of HEVs, hybrid electric vehicles, showed notable growth. Operating cash flow after R&D investments, a key indicator of the company's capacity for future investment, remained strong at 2.8 trillion yen. For fiscal year 2026, it has been difficult to issue a precise outlook due to the uncertain impact of tariffs. Still, based on the estimated full-year effects of known factors and planned recovery actions, the company has set a conservative baseline for operating profit at 500 billion yen and net profit at 250 billion yen. Looking ahead, the motorcycle business aims to sell 21.3 million units, exceeding the total for the previous year. The automobile business plans to further expand hybrid vehicle sales, especially in North America, despite the expected burden from new tariffs. In terms of shareholder returns, the dividend policy was revised. To enhance capital efficiency and maintain stable dividends in an uncertain business environment, the company is shifting from a traditional dividend payout ratio to a DOE, dividend on equity approach. As a result, the annual dividend is projected to increase by 2 yen, reaching 70 yen per share for fiscal year 2026. Motorcycle and automobile business. The motorcycle and automobile businesses are key pillars supporting the company's stable revenue base. In the motorcycle segment, the company holds the top global market share, selling over 20 million units annually. By standardizing platforms and powertrains and leveraging high sales volumes, it has built a highly efficient, low-cost structure that outperforms competitors, leading to increased profitability. In the automobile business, continuous efforts have been made to reduce the cost of hybrid electric vehicle systems. As a result, the latest HEV model is 1.5 times more profitable than its predecessor. Enhanced product features have also driven higher sales volumes, particularly in the North American market. Looking ahead, Honda plans to launch next-generation HEV models in the latter half of the 2020s, aiming to further improve both performance and cost competitiveness. Automobile sales volumes have been declining, so strengthening HEV sales has become a priority. FY 2025 unit sales. The motorcycle business recorded an increase in sales, reaching roughly 20.5 million units, primarily driven by strong growth in Asia. This solid performance continues to affirm the company's dominant position in the global motorcycle market. In contrast, the automobile business experienced a decline in sales, totaling 3.7 million units. This was largely due to weakened demand in Asia, especially in China, which remains a challenging market due to economic and competitive pressures. Honda's strength of the motorcycle segment highlights its role as a reliable sales and revenue driver, especially in emerging markets. FY 2025 consolidated financial results. From fiscal year 2025, Honda changed how it calculates warranty costs. Now, the company records the full estimated warranty expense at the time each car is sold from major production sites. This means that Honda is now setting aside all expected warranty costs right when a car is sold, rather than spreading those costs out over time. For example, if a car is sold and Honda expects it might need repairs under warranty in the future, they now account for the entire expected cost immediately. This gives a more accurate picture of future expenses, but can make current profits look lower than before. Even without this change, Honda experienced a decline in profit this fiscal year. Including the effect of the warranty change, operating profit decreased by 12.2% from the previous year, totaling 1,213 billion yen. Net profit fell by 24.5%, amounting to 835.8 billion yen. FY 2025 Change in operating profit. For fiscal year 2025, Honda's operating profit before the impact of warranty estimate changes was 1,341 billion yen, down 40.8 billion yen from the previous year. While price and cost improvements, along with reduced operating and R&D expenses, boosted profit, these gains were offset by lower sales, increased incentives, and negative exchange rate effects. Forecast for fiscal year 2026 unit sales. The motorcycle business is expected to grow, with sales reaching 21.3 million units, mainly driven by continued strong demand in Asia. On the other hand, the automobile business is projected to decline to 3.62 million units, mainly due to expected weaker demand in the Asian market. As a result, it appears that in fiscal year 2026, the motorcycle segment will remain strong, while the automobile segment is likely to continue facing challenging conditions. Consolidated financial forecast for fiscal year 2026. For fiscal year 2026, operating profit is forecasted to decline by 58.8%, down to 500 billion yen. Net profit is projected to decrease by a surprising 70%, falling to 250 billion yen. The assumed exchange rate for the full year is set at 135 yen to the US dollar. Although a 70% drop in net profit is quite a shocking forecast, it reflects uncertainty in the outlook, including potential impacts from US tariffs. This 70% decrease is based on a worst-case scenario. Also, the exchange rate assumption of 135 yen is conservative. So if conditions improve, there is a possibility that the forecast will be revised upward. Shareholder returns. Honda positions returning value to shareholders as one of top management priority. Starting from fiscal year 2026, the company will adopt a new dividend policy using DOE, dividend on equity, as its return indicator. Despite an uncertain business environment, Honda aims to maintain a stable and consistent return with a DOE target of 3.0%. For fiscal year 2025, the year-end dividend is set at 34 yen per share, bringing the total annual dividend to 68 yen per share. Looking ahead, the forecast for fiscal year 2026 is an annual dividend of 70 yen per share, marking a 2 yen increase from the previous year. Additionally, Honda has announced the current status of its share repurchase program, which was first announced on December 23, 2024. In the original plan from December 2024, Honda set out to buy back up to 1.1 billion shares, which is 23.7% of its outstanding shares. By April 30, 2025, Honda had already acquired 411 million shares, with a total expenditure of approximately 589.5 billion yen. The remaining 410 billion yen worth of shares are scheduled to be purchased going forward. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 1,460 yen as of May 14th, and the US dollar stock price is $29.63 as of May 13th. Current PBR is 0.5 and PER is 24.7. Dividend yield is 4.79%. Compared to the past few years, the profit forecast for this fiscal year is quite conservative, which has led to a decline in EPS, earnings per share. As a result, based on the PER, the current stock price appears relatively expensive compared to historical levels. However, when looking at the PBR and the dividend yield, the stock still seems undervalued. The dividend yield is close to 5%, which is considered quite high compared to other Japanese companies. Conclusion. As also mentioned in Honda's presentation, the current forecast figures represent the lowest level estimates, so there is a strong possibility of upward revisions depending on future developments. The outlook for U.S. tariffs remains uncertain, so the situation going forward is still unclear. Share buybacks are continuing, and it was also mentioned that dividends will be increased again this fiscal year, which is a positive point. It is important to closely monitor the company's performance moving forward.